Welcome to the Beyond the Stock Market podcast, a Groundfloor production. I'm your host, Brian Dally, CEO of Groundfloor, a private markets investing and lending platform with over $2 billion in investment volume. I've spent my entire career challenging industry norms, and in 2013, co-founded Groundfloor with Nick Bargava to make private markets more transparent and open to everyone. This podcast features some of the sharpest minds in finance. Each episode goes beyond the headlines to unpack the evolving relationship between traditional finance and new opportunities. Joining me today is our Vice President of Groundfloor Lending, the one and only Patrick Donoghue. Patrick leads all aspects of our lending business, from borrower experience to growth strategy and loan servicing. During his time at Groundfloor, he's developed deep expertise across lending, operations, and market risk. Before stepping into this current role, Patrick served as VP of Market Risk, where he was responsible for monitoring portfolio performance and analyzing macro and regional housing trends. Patrick has been with Groundfloor since 2016. That is 10 years. He's seen the company evolve from an early stage startup, just a few people in a room over at Georgia Tech's ATDC, into a national private credit platform helping real estate entrepreneurs across the country. Patrick, welcome to the show.
Thank you so much for having me, Brian.
How are you this morning?
I'm doing fantastic. I'm ready to rock.
Right.
It's spring, baseball season, it's coming.
It's happening. Let's start with you telling us more about your background. Walk us through your journey before Groundfloor and some of the roles you've had here over the last 10 years as well.
I mean, I think my key role is being a parent, but professionally, I was in DC. I was in the DC market for about 17 years. I started out in the credit union space and then went on to some larger mortgage lenders where I worked in production and origination, operations, and really it's where I kind of got the basics for lending. And then I experienced my first private money, hard money loan in 2004, and that forever changed the trajectory of my career. You know, I looked at that as, I'm like, this is incredible. It's this localized, not back alley, but localized sort of smaller component of lending, which I really felt like had, you know, a meaningful space in capital stacks for investors or even homeowners for that matter. So I got very involved in that. I had my own little origination platform at times. I worked for one of the larger lenders in DC, very much a private lender with their own portfolio. And, you know, that was ACC Mortgage. And that's essentially where I earned like a master's degree in how to look at private finance. And shout out to Robert Sanka. He really helped me understand the nuances around this type of lending. And, you know, lo and behold, I saw a PR Web press release in 2015 about this small, cool startup that time in Raleigh, Groundfloor. And I stalked you guys until you said, come on down. And so that's basically how it happened.
What I love about that story, and that I never take for granted, is how long you've been in this market. And that's why during our conversation it's going to be fun.
Absolutely.
To talk with you about how it evolved. Because your career grew up with this industry.
Absolutely.
It professionalized. You know, you were part of the wave of professionalization.
Right.
And when you joined Groundfloor, we were just starting to lend outside the state of Georgia,
right,
and really just starting to broaden things. So that's going to be a really fun part of the conversation. But just to orient people,
yeah,
we both know a lot of the business. A lot of the business that people know us for is the ability to invest.
Right.
And we've done a lot of marketing around the investor business. That business has been very successful. It's kind of, I think it's what intrigued you when you saw that press release about the business. But we have separated Groundfloor Lending as its own business unit within the company. Can you help orient everybody around what that is? When we say Groundfloor Lending, what is it? How does it work with the investor side of our platform? What is that business and how does it connect?
Yeah, so we are the manufacturer of the investment, of the real estate fractional loan investment or reinvestment. And that product is a fix and flip loan or new construction loan. And, we originate that, we close that, and we service that.
So that word originate.
So we
dive in on that.
We sell the loan, right? We attract borrowers. We have an in-depth borrowing base that's been developed over the past 10 years. We have new and repeat borrowers. We accept broker loans. And so we have a sales team that goes and originates loans. Then we curate them with our underwriting department. Then we close them, and then they become part of our servicing book, right? And so we service those until they repay. So we're taking that loan from inception through repayment, the whole loan life cycle. And we service 98% of our book, which I know is important for borrowers to understand because they have, direct access to the servicer to negotiate problems, to get questions answered, and, have sort of a direct pipeline with whoever's servicing. Most of the institutions in our space have sub-servicers, and we primarily service on our own, which is fantastic.
Can you talk about, we've really grown
Right.
company in terms of its ability to originate and manage credit for more. We, in your words, and I use the same word, we built this factory.
We did.
And it was to supply the investor platform. Right. Can you talk about where else these loans go now and how does that work?
So a lot of loans go into the securitization market, and we've participated in 3 of those bonds. We're looking to do more. And, the interesting thing about that is how compelling it is to see institutional capital and retail capital work side by side in tandem. And that relationship is where, Groundfloor really is unique in being able to have investors sit side by side, institutional investors, right? And benefit from the rates of return that are attracting institutional investors as well, right? So, that is a unique development and notable amongst our peers and notable in the securitization market itself. So we can distribute loans if we choose. There's a forward flow channel, which is smaller aggregators building up this type of loan to go into securitization. We have that capacity. We really ramped that up, as you know, Brian, in 25 and early 26. We do look to continue that. So that is as we talk about the development of the space, that is the, exclamation point in the available capital that has come into private lending from when I started is astounding.
Well, in our space,
right,
within the RTL market, the
Correct.
residential transition loan market, every other lender that I know of was essentially 0% retail and 100% institutional.
Correct.
We were 100% retail and 0% institutional for a long time. And we dabbled with institutional arrangements starting in 2018, 2019, and then COVID. And then we did another thing. And we sort of went through these ebbs and flows. Today, we have a mix of the two.
Yeah.
And I think what I've learned from that is that being at 0 retail never makes sense. That the retail capital can make the capital market work better, especially when you do the regulatory work that we've done. I think what's interesting about what you said there is we have these different outlets, and I think the business is stronger than ever because of that. And I'm sure over your 10 years here, you've seen quite the change.
I have. I remember calling you the first time we hit 20 loans in a month, right? We do that regularly on a daily basis now. And that just speaks to sort of growth. But, I take a lot of pride in that.
That was the big goal, by the way, 20 loans.
20 loans, right.
For a long time.
Do you remember the date? October 30th,
I don't,
2000.
I'm glad you do.
16. What I'm proud of, Brian, is that we focused on the organic growth of the platform, right? And when we were ready, we did attract the institutional component, and that is our roadmap to growth. That tandem is the roadmap to growth.
Yeah, I think that's right.
Yeah.
So people may not be familiar with this type of private credit.
Right.
Sometimes people think of private credit. Private credit's in the news a lot right now.
It is.
People are talking about AI disrupting software companies, disrupting the cash flows that feed the private credit. This is a very different animal. Can you describe the typical borrower and who are these entrepreneurs that are coming to Groundfloor for capital, and why do they choose us?
Well, this type of private credit's much more approachable. These are our neighbors. These are entrepreneurs, small businesses taking on a residential real estate project to improve it. And by doing so, they create jobs and there's benefits to the community.
Would this be somebody like I see on a house flipping show?
This is exactly who that is. And they've called us for capital, right? But yeah, it's people it's that when I talk about my business, people's eyes perk up because I think at some time or another, anyone that has owned real estate, and has maybe had to, sell a house or, do remodeling of a house is interested in that, right? And so we finance entrepreneurs. We are entrepreneurs, right? You and I are entrepreneurs. And we love that component of what we do. So I would say the difference is the granularity of these investments, right? Versus, say, a massive corporate private credit loan. It's very different.
I really do recognize in them a lot of what I have learned about myself as an entrepreneur and what I see in other entrepreneurs that I work with. The breadth of skill sets that they have to manage, the way they have to keep the plate spinning. They're often a little bit over their skis, hair on fire.
Mm-hmm.
When they come to us in a world where there's a lot of choice now,
sure.
I mean, they can just go borrow money from a friend. They could, tap into their home equity line.
Uncle Jimmy.
Yeah. Uncle Jimmy. They could go to Hard Money Harry.
Right.
There are now, the industry has a dozen or two firms that are reputable and professional.
Gap funding. Yeah.
What do you think leads them to us?
Well, it's clear. We have a clear calling card to attract borrowers, and that's our deferred interest, which is essentially the borrower does not have to make monthly payments, that the interest accrues and then is repaid upon repayment of the loan. And so when you're thinking about a small business owner, right? What is critical to every small business owner? It's cash flow, right? And so when your business is renovating a home, you need that cash flow that would otherwise be going to an interest payment, especially if you're doing multiple projects at a time. See, the benefit that we bring to the space is that we defer that. We recognize that. We recognize that hardship, right? That entrepreneurs have to go through and our borrowers have to go through. So, we made a very conscious decision to be unique in that. And, that is the product that actually also gets securitized. So we brought that product from, banks do that in some cases, but really inception in our space into the securitization market as well.
Do you watch Shark Tank?
I love Shark Tank. Cubans from Pittsburgh.
I always think of the battle between Mr. Wonderful and Mark Cuban.
Yeah.
Where Cuban is offering equity and entrepreneurial support, and Mr. Wonderful is just looking for, a royalty.
Right.
Typically.
Yeah.
He's just looking to skim some cash out there until he gets
True.
his money back with a return.
Yeah.
And I always think of us as more like Mark Cuban.
Yeah.
On the side of the entrepreneur.
Absolutely.
And other lenders have tried to do this. I know they just didn't have the retail base of capital that allowed them to do it. We may see more.
So
do it
powerful,
now, right?
Yeah.
Now that we've
established it. Yeah.
Interesting.
Yeah.
When you joined the company, we were only lending in Georgia.
Yeah.
When you joined, you helped us figure out how to expand to other markets. That was exciting. That wasn't easy. We get a real-time look at a lot of different housing markets.
We do.
I think that's a really fascinating time to be looking at housing markets, especially in the post-COVID era and how things have changed. And we see deals coming through every day, all over the country. What are you seeing right now from your vantage point? I mean, what trends are developers and investors navigating in today's market?
The predominant trend, since late 22 has been the difference in the exit, right? I mean, August of 22, predominantly, you were seeing exits from sales of these renovation projects. Whereas, that it might have been a 40-60 relationship to exits, 60% being selling, 40% being refinancing then versus say now, and then that has flipped. It's probably 60%. It might even be a little bit higher now, Brian. And even in our book, shows that the exit really is, longer term financing for a rental, right? And that has to do with, affordability issues and sort of, some of the slowing down in like new buyer purchasing. And so it doesn't not make sense, right? So, but that is the fundamental change that I see is on the exit, right? And then you kind of have some margin compression on what the lift of a renovation project will bring, which is, really why new construction has taken on a bigger portion of our book, because new construction with housing supply, borrowers are finding better return there. There's more to make in those types of projects, more to create, more value to create.
The borrower is creating a product.
Correct.
The product has a buyer, even if the buyer is a long-term rental portfolio, there's an end user.
Yep.
And they have to adapt to what the market yields.
Correct. That's right.
To make their product saleable at a price with the features that people want.
Yep.
Right. And so that makes sense to me about how that's changed. I mean, one more question before we break.
Yep.
You look at this year, you see the trends and how things are lining up.
Yep.
What are you expecting in real estate for the rest of the year? I mean, how do you think this market continues to evolve as 2026 goes on?
I mean, my honest answer is it's probably going to be a lot like last year, where it's a bit sluggish, right? There's still some uncertainty present. I worry a little bit about employment and what may happen there. There's a lot of headline risk around AI and that influence. But largely, I think we're going to see, inventory levels and, demand levels are generally, changing a bit, but generally the same. I think it's going to be a sluggish market, which is why I would expect more exits from longer term capital coming in and these projects becoming rentals, even the new builds. And I think affordability remains a constraint. And I think it will continue to do so. And bad inflation report yesterday, but inflation generally is better than what it was 3 years ago. And we have shifts, and some of those are near term and long term, but I really think it's like the same story with different headlines, with one headline taking the priority over the
last
other.
year it was Liberation Day. This year it's a war in the middle.
We do feel tariffs, right? All these things matter, but I would say affordability is the driver, and I do sort of note employment.
Yep. Interesting. All right, Patrick, this has been a great start to our conversation.
Thank you, Brian.
We're going to pause here, but when we come back for part 2, I want to talk more about what you see for real estate trends and the future of ground floor lending.
Excellent.
For our audience, you can connect with Patrick via his LinkedIn, which we'll include in the show notes. You can also learn more about borrower solutions at lending.groundfloor.com. Check out all of our episodes of the podcast and suggest a future guest for us at groundfloor.com/podcast. And please like and subscribe whenever you tune in. It's helpful to help spread the word about our new podcast. Thanks again for joining us on Beyond the Stock Market.